Good morning, everyone, and welcome to the European crossover webinar. And we see the dollar slip just a little bit, which is really expected to be a positive NFP report. I think we have to go and take a look at. What's it? German industrial orders came in minus 0.40. Interesting to see the euro up, but what else is new? So anyway, we'll move on down here to non-farm payrolls. Last month, you remember, I was looking for a good number, but I wasn't looking for anything that great, but I was looking for a good number. Basically, I was looking for a very good bounce back number because, I mean, obviously we had that surprise the month before. I think this number is going to be good too. They're looking for 180. I think it's going to be something like closer to 220 or something like that. 220, 223, something like that. I think it's going to be, I think, all right. The key, I think, is going to be this wage earnings. They're expecting to be the Reuters poll is 0.2. Last month was 0.1, which is kind of weak. Which probably is the thing that kind of stopped the euro from going down to 984 at the time. Remember, my two numbers were 1007 and 984, with extreme at 963, and the low was 1002, so it just missed it by just a few pips. But the number was so good that we probably should have gone to 984, and that's one of the reasons I was pointing to people or telling people what I was alluding to is that notice how it just didn't really go as far as it could have on the NFP, and one of the reasons I was saying, it looked like for a while it didn't really want to go down. We talked about that on NFP. Obviously, then sparked some buying. Post NFP, now the flows have all gone in towards the Europe and into the euro, and basically the dollar. I think you have to look at it in that view. Luca says good morning. Good morning, Luca. I think you have to look at it in that vein. You have to just be realistic. I mean, I'm saying lots of times I'll dog the Eurozone for this, that, as far as the economy. But you can't deny the flows of the market. The flows in the sense is the momentum of the market. And so, as I said yesterday, as I discussed with Blake, right or wrong, the market is viewing the dollar as glass half empty. So the number, it would have to be an absolute boffo number for the euro to give its gains up and then turn around and start going south of the border. Now, I expect a good number. Will the euro go and pull back? Yeah. I mean, we can discuss the different levels as we do each NFP as we prep. But, you have to be realistic. They've gone with it, and the flows are in that direction. And, if we were to come in with a weaker number, this euro is going to go on and continue to go and take off. If we come in with a good number, I think it's going to be good. It's going to give up some of its gains. If we come in with a very good number, it's going to give up a little bit more of its gains. But it still doesn't change the fact that it's in a bullish mode. In order to flip the switch going the other direction, we're going to have to go in excess of 300,000. That's it. And I'm not saying we're going to get 300,000. What I'm saying is it's going to take that kind of number to flip to turn the ship around. That's the only way, because it's just going to pull back and people are going to say, okay, now, but now, depending on the number, we could end up pulling back. They buy them, and then the rally back, it struggles, and then they go back and forth, and maybe in a few weeks it's starting to head lower. But for now, the mode is just bullish, and that's just the way the market's going to be looking at it. So even people that would be thinking it's going to be a good number will be buying it, covering on any dips. So the only way that the euro turns around, everybody starts, whoa, you know what? And really it's all about whether there would be anything in September. Obviously, it certainly doesn't look like it right now at this point. But with that, they've really, taken the dollar down a pretty good peg. And like I said, once you get the train or the ship going in one direction, you can turn the ship around, but it's not like you're on a speed craft and you can just flip the wheel and next thing you know, you're going in the other direction. It takes a while, just like a big, let's say a tanker or a big cruise ship. Yeah, they may want to turn around and go the other direction, but they don't flip it around like as if it's a small car. It takes a while, so that's the way I'm looking at it with the euro, is that that's the way that you'd want to play it. And why I think this time is it's more important to watch the way the market's going to react over the course of the first hour and see how what's it going to, adjust or whatever. I mean, some of y'all, if you were short from earlier and you kept your shorts, then yeah, you probably say, look, let's see how far we can push this thing down. But I think it's going to be important to see how the euro reacts overall. So let me see. We do have Canadian employment. They're looking for 10,000. And no thing on full-time employment, part-time. This always is very key with the Canadian jobs number, full-time, part-time. I remember this is about probably 6 months ago, I think it was. We had a very good number. I don't remember what it was. It was actually longer than that. It might have been 9 or 10 months ago. It was a very good number. I mean, it was a great number. It was like I said, it might have been closer to 11 months ago. It was like something like 60,000. It was like ridiculous, like awesome. But 40,000 of it was comprised of part-time employment. So initially they ran with it, and then they said, wait a minute, 40,000 is part-time, and then it turns out it ends up reversing a lot of its gains. So let's go on and get back in here. We'll read just this part in here. It's not even a very long article. The U.S. non-farm payrolls report is due at 12:30 GMT, with economists polled by Reuters expecting 180,000 jobs to have been added in July. Everyone's waiting for the NFP. They've been all week long, says Commerce Bank currency strategist Esther Reichelt from Frankfurt. It's particularly in focus because of the weak GDP last week, which led to a lot of disappointment and also the repricing of rate expectations. Now everyone is waiting for some signal whether the U.S. economy is really in such a bad state or whether there's hope that Q3 is going to be better. A strong NFP reading could help the dollar by reviving expectations that the Fed could raise interest rates by year-end, in a scenario that had been discarded in days that followed Britain's shock vote to leave the European Union in June. Elsewhere, the Australian dollar rose 0.4 to a 3-week high. And I was looking at the Australian dollar. This is very interesting. The Aussie dollar, remember, going into the cup, there's some big traders there looking for 72 cents, and they're really getting taken to the clean. It's pretty good. But I think it's pretty interesting to look at in lieu of, not in lieu of, but in line with expectations for the dollar. And this Aussie dollar is just like, I was even surprised. I looked at it this morning. But it says anyway, elsewhere, the Aussie dollar was 0.4 to a 3-week high of 76.63 for the week. The Aussie has gained 0.7%, showing resilience even after the Reserve Bank of Australia cut interest rates to a record of 1.5 on Tuesday. Recent firmness in iron ore prices and a search for yield among investors have helped support the Australian dollar, said Roy Teo, senior FX strategist for ABN AMRO Bank in Singapore. Buy the Australian dollar, but the Australian dollar goes, the risk of RBA cutting rates will increase, Teo said, adding that such prospects could offer an opportunity to sell into the Aussies rally. So let's come back. I think this is a very interesting story too. A lot of people are concerned with the emerging markets because, obviously rates are being kept so low. Probably something to take a look at and keep your eye on for a while. Looking out. Emerging market stocks jumped on Friday, on track for a fourth week of gains, and currencies traded broadly stronger with South African assets firm after local elections saw the ruling ANC party lose significant support. MSCI's emerging market index rose 1% of the day and looked to chalk up gains of 1.3% over the week, helped also by a fresh round of stimulus from BOE, which cut interest rates and restarted bond buying. Currencies also strengthened on the day. Russia's ruble gained 0.6 on the dollar, shrugging off weaker oil prices, while South Africa's rand strengthened to 0.4 on a 9-month high. South African bonds firmed across the curve. The 10-year issue traded near 8-month highs hit on Thursday following Wednesday's local election, where voters vented anger at corruption, high unemployment, and poor public services. More than 90% of votes counted showed the opposition Democratic Alliance leading it in 3 major cities, threatened to deal the biggest electoral blow to President Jacob Zuma's African National Congress since coming into power. You have a significant drop in ANC support and 67% increase in support for the DA, which was gained ground in important areas such as Johannesburg. City's head of CMA debt and FX strategy, Luis Costa, said. Let's see. A lot of people, I think that this is a concern looking out, not for today, not for next week, but over coming into the into the fall. I think it's going to, well, probably even before then, but it's something to keep an eye on. I think you have to, when you're looking at the SPOOs, so let's go and move into the charts. Luca saying inflation, UK inflation projected to shoot up 3% next year with nominal rates near zero. That makes real UK yields at most negative in G7 economies over the next 12 to 18 months. And textbook case for capital outflows and currency depreciation. So let's take a look. On NFP day, it's about extreme levels. That's the way we always prepare, because you get these wild swings. So it's about that. And I think, like I told you, when you look at it through that lens, as far as what I've said about how the market views the dollar as a glass half empty, I think that gives you an indication how you're going to want to look at it or trade this. Looking at the euro, if we get a pretty good number, I think we'll dip easily into the, go sub 11. But if we get a pretty good number, take us into 1060. Now, if we get something like 269, we'll probably end up testing the 1060s, right? Like 269, 270, we'll come into this 1043 area to test the bias pivot where it broke out. But once again, you got to give it to the euro. I'm just saying is it's going to be an area for people to cover. Okay, that's what they're going to be doing. Now, some people may want to be careful buying or whatever. They'll probably still buy anyway, but it'll be people are going to use that if they're short as an area to be covering, and then you'll see the thing pop. I think you have to just let it play itself out. I really do. I'm not going to be, I always say I'm not going to trade, and end up trading. I think this is when you have to be careful, because I think the number, here's the deal, is I think the number is going to be good. I don't know how good. Like I said, if it was me, I'd say closer to something like 223 or something like that. But I think the number will be good, but I don't think it'll be good enough to turn the ship around on the euro. They'll pull the euro back, but it's just still going to move up. I think it's going to be within a range. I think it's going to be I won't say volatile, but I think we're going to pull back, and then we'll probably jump back into this range and dance around. You see what I'm saying? If we get a good number, I think we'll get into the, if we get a very good number, pretty good number, we'll get into the 1060. So we're probably going to go with somewhere between this 1085-ish area. It's probably what we're going to test. 1082. A better number will go into the 60s, and even better number will go here. But I think that it's probably not going to be a good enough number to push us into 43. So we'll probably come into the 80s on a good number. Then we'll jump back up here towards 1151. Then we'll probably come back in the teens, and then we'll just kind of waddle around with a bit of an upside bias. And maybe we finish the day. I'm just not trying to call, but I'm just trying to give what a feel of how I believe it would trade. And then we'll probably finish the day maybe a little bit higher. All things being equal. Obviously, if we got a horrible number, not horrible, but if we got something like 140, forget it. Euro's going to be blowing doors. I mean, if we get something like 120, we're going to take out the stops at 1255. And that's what I'm talking about, extreme levels. We'll take out the stops at 1255. I think we'd run out of gas right in here. If we get a number like I said, like right at 200, we'll probably test into the 80s. What I'm saying is like 209. If we get anything better like the 230, we'll go into the 60s. We might even dip a little bit further, but I just don't see the euro reversing. The only way we can reverse is if we get something well over 300,000. If you get something like 330,000, that doesn't seem likely in the cards. Then that would really scare the market. It could end up really shaking off. We'll have to see what happens when the number comes out, but I'm just giving you the lay of the land at this point. So that's covering the euro. We'll take a look at the dollar yen. I was looking for a move. After calling this move, I thought, okay, we're going to move down here at 069. When we held in here, and then it looked like, okay, now they've got a target. And on the bounce back, I thought we'd come back up here to 0.177. We fell short by about 10 pips. I am a little bit surprised to see it continue to weaken here. I would have thought, on the pullback, we sit here, and then maybe coming into the report, we're like around 150. But now we're only at 101. I mean, like I said, they're hell-bent to sell this thing. So this one's going to be a tougher one to trade, I think, because on a good number, we'll definitely come back into the twos, I believe. I don't think we can make it appear, but that's why they want to sell it. We talked about that before, and it didn't, on this rally back here, because you remember right after the BOJ, I said the only trade to do is just to short it, because people were thinking, oh, maybe I can buy it because it fell so far. And I said we'd go sub 102. We did take out 02 by 2 pips. And I said we had 210, which at the time was a 61%. And so that confluence there, and we saw a nice bounce. And we talked about it going up here to the top of the zone. I thought, you want to short it if we can get it up here to 330. Well, we ran out of gas right at the top of that zone. So as we weakened and we kept on sliding back, then I said, you know what, looks like they want to go to 0.069. I tried to get people, crazy thing is, I told it, and I kept, not one single person took this trade. I was stuck at the DMV, but it got to that number. It took it out by 2 pips. No, 1 pip. And it quickly rallied 50 pips, and before the move was over, it rallied 60. Before pulling back, and then I thought we might make it up to 0.177. Came out 10 pips short. But I'm a little bit surprised to see it weaken here, which is going to make it tougher here. I think a good number will take it into the twos, I believe. Might see a little bit of short term, but everything looks so horrible that they're gonna keep the pressure on. Maybe we can't. Probably I guess the better trade, I guess, would be, depending on the number comes in, is to scale moves into the 223 and then again here. 257 is at 38% of this move is 0.68 to 563. So this is probably your target if you can get it on a good number right in here. As far as the euro, on a very short-term basis. If you're bearish, I think, okay, here you see this 1169. If they want to, if they think things are going to be whatever, I think they can take it up in here. Any move up in here to around 72, 73, I think is worth a fade. It doesn't look like you'll get it, but I'm saying if you got a quick pop, you get some shorts scared, and you got a quick pop into the 70s, I think you could fade that going into NFP. But it probably doesn't seem likely here at this point. But in case you get some, good. I talked about shorting this yesterday at 11:58. We fell short by about 7 pips, and we did weaken. Obviously we got the market, weakened, but this 1169 is pretty key. If we could get a spike up there real quick ahead of NFP on some short covering, let's say 73. If you're bearish, that's not a bad area to take the short on a little bit of a squeeze up in here. Well, take a look here at the Aussie dollar. This has been unbelievable. There were some good traders that were looking for, potentially 72 cents once we got the cut that a lot of people expected. Unfortunately, too many people expected it. They're looking for 72 cents. And we've talked about this on and on and on again, how this market will trend. It'll break you. I mean, I've been on that side of the tracks. But I don't like the Aussie because it doesn't move enough for me. You see what I'm saying? You see this thing, it's like, you can't beat it as far as it's going hard, but look, it just doesn't look. And then you get these signals. Look this long-legged doji, which is a good thing. I'm saying, like, you look at this long-legged doji, what's been the prevailing direction? And of the immediate move, up. So generally you pull back. You see what I'm saying? Doesn't mean you turn around and reverse hard, but you're going to give up some of those gains. But look, you didn't pull out, and look, now you're looking, okay, well, now this is a nice gravestone doji. And then look, well, this is even better. And look, it just goes. That's the same. This thing, once it starts trending, you got to get the hell out of the way. But you see, the moves are just really slight. It still continues to go higher, but like I said, that's why I just don't trade it anymore. Back about 3 years ago, it was an awesome market to trade when it was above a par. You get some good swings in this thing. But yeah, this is very worrisome. I mean, to me, this is more foretelling of the dollar than anything else. Even though this has a lot to do with iron ore, blah blah blah. To me, that this being this high, to me, is more foretelling about how the market views the dollar, for whatever reason. Right or wrong, that's how it views it. So that's why I'm saying you have to temper. All you have to do, in my eyes, you have to look at Aussie dollar to get a good gauge of how the market is viewing the dollar. I guess you could do the same thing with dollar yen. You see? I mean, but dollar yen, like Blake says, runs on its own thing. You see what I'm saying? But, for the Aussie to be here, I mean, it's pressing up against these highs. To me, says a lot. I think that's to a certain extent, that's my temperature check right now. I'm like, wow, I wouldn't have expected that. I mean, it has a lot to do with the Australian economy, the search for yield, blah, blah, blah. But, I mean, come on. So I think that says a lot in and of itself. The key level above is this zone, the 676.93. It's unbelievable that we've made it up that high. That 76.93 is pretty key. That's what I'm saying is I mean, you can see here, this was just freaking beautiful. Oh my God. It was unbelievable. We did really well on that move. I'm saying we were talking about one of the guys here in the chat room, not chat room, here in the webinar I can't remember his name. He did exceptionally well. But like I said, hard to argue this point here where we're at. The 76.93 is pretty freaking huge. We'll see what happens on this. Victor says, "What about the Euro Aussie?" Yeah, I don't look at cross rates on this webinar because it's only an hour webinar. So we just look at the majors, We look at gold and crude, and sometimes what you will do today, Pedro wanted to look at S&Ps, so we'll do that. That's what we don't have. Now, when I cover for Blake, I will look at cross rates. The thing is, it's not that I just don't want to. I don't even chart them. So if I were to pull up the Euro Aussie, I won't have anything up on the Euro Aussie. So I'd basically be starting from scratch. If I had something on there, I'd be happy to pull it up for you real quick. I just don't have nothing on it, so I'd be starting from scratch, and we're trying to prep for NFP. But when I cover for Blake, then I make sure that I, post up some charts quick before I do the show, or like when I covered when he was out on vacation, then I made sure I did charts over the weekend, so that I can look at all the different pairs for people with the Euro Yen, the Guppy, or whatever. But anyway, yeah, it's unbelievable. This thing has been right here. It's just crazy. That's still, showing a lot of strength. But this 76.93, that's huge here. You see that level coming across? So I think a lot of these pairs, that's why I think they're at very key levels. We'll take a look when we get back. We're going to take a break. We'll take a look at gold. We'll take a look at the dollar CAD. We need to take a look at cable also. And then we'll take a quick look at crude. I was bullish crude over the last 2 days. And so we'll also take a look at the SPOOs. If you remember correctly, on Monday I told people to sell the SPOOs. It was good for 20 handles. As I said, even though the euro was ignoring it, I said, they're not going to be able to ignore that European banking stock story, after the fake Eurozone bank stress tests. And that move was good for 20 pips. 20 handles in the S&Ps. But I think we'll take a look at it. But the overall move in S&Ps, I think, is you got to go on and fade the rallies. And I think that the rally, I remember saying about that, but we'll look at it. I don't think the rally will last very long today in the SPOOs. So I think it's one of those things where I was talking to Anthony Crudelli saying, look, when we get the rally, I don't think it's going to last very long. It's going to be like real quick, and then you have to take that quick pop in the SPOOs. I don't think it's going to turn around and fall apart. I just think it's going to head lower from there. But yeah, that was a good call at the beginning of the week to short the SPOOs. And I told you that one trader was saying, don't worry, the SPOOs always go up. Even if there's bad news, they go up. No, they're not going to go up. I think they pull back up like, 3 handles, maybe 3 handles. And from there, it was south of the border. It's time to go and take a break. When we get back, we'll take a look at, there's no news coming out right now. So I'm just going to put it on, I'm just going to put the cable here, and we'll get back. If there's news like during the day, we usually put it on the news feed in case there's any news. Well, I'll go and do that. Anybody here listening? But there's no news that's going to be dripping down, but what the heck, I'll put it on there anyway. Anyway, we'll catch ourselves about a 10-minute break. Thanks for joining us here. Okay, everybody, welcome back. And let's go and take a look here at the cable. So nothing's changed since yesterday. Like I said, we're looking at the extreme levels as we get ready for the NFP because of the wild swings. Nothing has changed. As I said yesterday when the BOE broke, the bias pivot is 32.23. I think eventually this market is going to go down to 30.19. Obviously, if we got a horrible NFP, we'd get a big rally. But all things being equal, I like this 30.19. You will find some support. Some short covering here at this 30.54. That's a 61%. So if we get a good number, which I think we will, you'll see a pullback. They'll go in and goose the stops here, and then you'll probably see some nice covering here at 30.54. But I think this 30.19 you see here is going to be a very nice bounce area. You see how they came down here, They rallied up here to 3019. They fell back to the 2874. They rallied and got just above it, and then they turned around and failed and slid right back down the tubes. Rallied back up to 3019, came back, and then took out the low area here, and then came right back and struggled at 3019. So that was a breakout. So that's why this is a bias pivot. Now, yesterday, I said that this is now a bias pivot, which they both are. What I'm saying is, I was telling Blake that right before we were having the release. I said, or when we were having it, and it popped above, and I said, this is a bias pivot. It breaks past that, it's going to be, pretty tough, for the market. For those that got short. And I know some people I talked to, they're like, hey, that was a great call. They made a nice little chunk of change. I said, for those people that are short, they got no reason to cover. They just put their stop just above 32.23. I even said 32.27, 32.35, and just ride that thing down. And they had a very nice run. We actually even went sub 31 for just a hair, or right at 31. We popped back up. You can see here the struggle with the 31.52. But I think on a good number, we'll take out this 30.86, and you'll see some nice covering here. I think this is the extent of the move for the short haul, 30.19. Right in here. Doesn't mean we can't get a little bit past it, all things being equal, but the whole reason I was going to stay bearish, like I said, you can't fight a central bank. On top of that, you'd be coming into Friday, which is expected to be a good NFP. Obviously, if we didn't get a good NFP, it's going to go in and flip things around a little bit. But on a good NFP. Then on top of that, you have end of the week. So everybody's going to be, oh, what a horrible weekly chart, weekly bar. So that's going to add. And then as you come into Monday, oh yeah, definitely want to sell this cable. So there'll be more further pressure. So that's an area where I think by mid-New York session is an area where people probably might want to cover, all things being equal. But like I said, a trip down here at 35.54 should find some buyers. But that 30.19 I think is going to hold up on a very short-term basis. Okay. We'll move into dollar CAD. To me, I look at it as dead money. I was talking to some people, I think it was yesterday, day before yesterday, actually earlier yesterday in the European session, and so I was asking, what do you all think about towards the 3080s? I'm like, yeah, that's that area we've been talking about to short. And I go, on a good NFP number, you might even be able to get something closer to 31. Well, the crude went and rallied, so that killed that opportunity as far as, because I said, hey, look, it doesn't look like it's going to go anywhere. This 33 is key, but on a good NFP number, all things being equal, that we can hang around here, you might get closer to 31. But like I said, with the rally that we saw, a pretty good rally in crude, that really got things going, going south. I think overall, we're going to go down here to 29.09. Because if the crude will kind of, back and fill. And I talked to some people in the chat area, they're asking, what do you think about this crude? And I go, I just think we already had all the short covering yesterday, not all of it, but I'm just saying I think today's just going to be a back and fill day. Like I think, all you're going to be able to do is to scalp a little here, scalp a little there. I don't see any big moves right now. Now, I think that we've put in a bottom, so buyers will try and step in and buy some dips and try and move higher over the next, I don't know, like 10 days or so. So I think that augurs for lower prices here in the dollar CAD. Once again, all things being equal. If we got that number like 343,000, well, you know what? That's gonna be a pretty tough road to hoe. But like I said, all things being equal, I think it's gonna be a good number. I just don't think it's gonna be a great number. And with crude starting to find its footing here, then I think that we can go and make a slide. And that slide is going to take us down to 29.09. Now this pink area, this zone here, you can see that there's a lot of good support in here. You see that right here? I've called that. I've had that in there, that band in here for a long time. You can see how well it's held the market. Okay. Could we make it down there? Yeah, but to me, I'm thinking this 29.09, which is about 125 pips away, 100 pips, a little over, whatever. I think that's going to be a decent area here to cover them. I just don't see the dollar CAD with anything really great at this point. Also, they have the Canadian jobs number. Who knows how that's going to play out? I don't follow that thing very closely. But that's what we have here in the dollar CAD. Now, let's go and move in. We're clipping along. We'll go on and move into the gold market. Now, I was bearish gold right in here. I told you all about that. I was talking to some people, and I was telling them, hey, look, on the level 2, I was seeing some good volume at I think it was 70.50 and 71.50, if I remember correctly. And but we still got higher. We made up to this level, which made up to this level here, which that was already drawn here, 74.30. And then we pulled back, and then we had 3 back-to-back spinning tops. You see that? Boom, 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 boom. And then they try and goose them up some stops, and then the wheels really fell off the caboose. Now, I was looking for lower, and don't forget, we're trading here in the 72. So I had some support here at 65, and maybe just a hair below 65, which on a very short-term basis, if you're looking at it like on a, which it was, I don't even do 15 minutes on here. What the heck? Oh, there it is. So you can see that let me go back. There we go. Yeah. So we got up in here, and they popped them up a little bit, and then you can see it started to slide down. And I had that support. What the heck? I'm trying to figure out where the heck I was. Right in here. Okay, here we go. And I had the support there, 65. I'll show you here, 65 right here. And they can dip a little bit below 65. But that was the area I was talking about. So it's a pretty nice move, good for about $7. But, and one guy, he actually shorted it up in there on the call I was looking at. So he shorted it, and he goes, man, I'm hoping it can get down to 1363, which is my breakout area from before. Remember, 1362.80 was a 78%. That's from way back here when it got a pair. I said, hey, if they get a 2-hour close above 48.70, that opens the door, and we're going to go right up to 62, 63. And that was it. There's a 78%. Then we backed up a little bit. Well, that's the breakout area. So that's exactly what that guy said. Yeah, I hope it'll make it there. And sure enough, I mean, he obviously did really well because we went, down there. We actually dipped a little bit further here, but then with the BOE, that popped it right back up, and then we kind of languished. That being said, if we don't get a good report, the door's open for 1403. That's where they're going to go on a break, on a further advance. 1403, and above there we've got 1425, which is pretty good here. But, that QE is not going to go away with the BOE, so got to be careful on this one, especially with the dollar under pressure. So let's go on and move into the SPOOs. Pedro wanted us to look at that, so we'll move into that. And I haven't paid too much attention with the SPOOs. Here we got crude oil on the 2-hour, crude oil on the 30-minute, Brent and RBOB. Here's my levels. So you see what I was looking at. I thought once we got above that 35.20, this thing could get clipping and going. And which is where they first ran out of trouble. You see what I'm saying, on the rally back. That's why these levels and zones are so freaking awesome. So let's go and take a look. The SPOOs, which I haven't been doing that much lately, other than I recommended on Monday. If y'all remember, I recommended on Monday to short the SPOOs because that European banking story said that it's just too much. It's just too much. And I'll be doggone, folks. That was good for 20 pips, 20 handles. 20 handles. Well, actually, I think at the time we were trading at 64 at the time, so it was a little bit more than 20 handles. But hey, I said shortage. So here we are on a 2-hour. I haven't really done any work on the SPOOs in quite a while. See, look, none of my levels are updated here or anything. Here's a pretty good level in here. There's 2170. You can see a lot of touches going across. I think on a good number, I don't think the rally's going to last very long at all. I really don't. I certainly wouldn't be waiting for the cash equity open. I think on a good number, it's, the key is going to be, can we blow past this 2177? I kind of doubt it, but if it is, it's just an area to short into. I think. I'm not going to, you could look at it this way. I don't think it's that I don't think we're at a point where you can say, well, let's take a look at the fib, which we will. But I don't think it's about the fibs or whatever at this point here. So 2170 actually turns out to be the 78% on top of that. So we'll draw that in here. So that would give you a little bit of a confluence there. But I don't think it's about that. I just think it's about just rounding the numbers up. 2178. I know the high was 77 3/4 and the low was 2141, but just put it 2142. If we get a good number here, this 2170 is definitely where you want to jump in. I think on the sell side, if we get a good number, I think it can. That's the area. Probably is going to be good volume. This area, this 2172.85, I like that right there. I don't think the rally is going to last very long at all. I really don't. And I've been bullish, Spooge. You know, I've already said that ad nauseum, but I was the one back in spring. I kept saying in spring, all-time highs by August, all-time highs by August, and I was right as rain. And I was the one saying, which I hadn't said in a while, but I was the one saying on Monday, sell the SPOOs, and it's traded at 2164 on that dip. Sell the SPOOs, and it's good for 20 handles. I think that you'll probably see some selling here, but I think if you can get this 2172 around close to that, and obviously you're probably splitting hairs to try and what's it in between 70 and 72. I just think that we're just going to have to start to work a little bit lower. It's probably not going to happen all at once. I don't think we're going to come apart or anything like that. People have been calling the SPOOs are going to come apart. They're going to do this. They haven't done anything. You know what I mean? But I think that we can get a rally. If you back up the truck and look at this on a wider perspective, I think we can get up here. Whether we hang up here or not, I really don't think we will. I think they'll fade them pretty quick. And if they fade them pretty quick, get a little bit of time. 2164 we're at right now is going to be a good area to cover if you're, like short-term trading it. So let's take a look at this. See this nice area, that nice zone. So on a pop, on a good number, this 2170 is also the 78%. If you can get 2172.5, that's great. It's actually 2172 3/4. And I think that the market will slide back, and then you can cover 2164. But I think overall, see how the market's trading in this zone here? Right here, we dip below the zone, so we'll come over here. Right there. So we're in this zone, basically 2152 to 2170, so an 18 handle zone. I think on a good number, we might be able to pop up here. We'll have to see. I mean, the good number, I guess it's in the eye of the beholder. But if we get something like, like around like in the 220s, that'll probably allow us to get up here in this 2172 area here. I don't think it'll last that long, and then you could cover around 2164. But I think overall, we'll probably end up going back towards this 2152. But if you want another level before then, it's going to be right here, 2159. So we're trading, if you look at it, basically right there, 2159.25. So here, if we were to do this, it's basically a zone within a zone. So you get the 2172, you can buy them back around this 2165-ish area, okay? I think that the move overall doesn't sound like it's a whole lot. It's going to be a move back down to this part of the zone, 2159. And then the market will probably flutter around maybe over the course of a couple days or so before I think it'll break lower. Now, I don't know when they'll get this break a little bit lower past the 2140s. That actually might get a little scary and get us into the 21 upper 20s, lower 30s. But for today, for now, I think the short-term move, I think is to fade them. I don't see another leg up. We just don't have the news for another brand new leg up. And we could have done that with the BOE. So, I mean, they kind of may take a look at that overall. That may kind of hold us up. But my thinking is on some good news, like 220, maybe, I don't know if we close to 230. My number's going to be like 223. But if you can get this number, you sell them here, you cover them around 2165. They may move back up towards 2170. You probably run out of gas before then. You short them, you sell them, you come again around 2159, and then you have to see how the market goes after that. It's already time to for Blake to come on. I was already bullish on the crude for the last couple of days, so it's not really a whole lot to say. Not necessarily going to take kind of a,